What's up, guys? So I wanted to do a update on the trade of Palo Alto. So I released this video on March 28th, which is only a few weeks ago, saying that I was starting to buy Palo Alto. And basically, as you can see in this picture on the chart, I circled in green why it was an attractive point for me to step in, and that's that the stock had stopped its free fall and it started to trade sideways, which is when I typically like to start buying if it's a new position, or start adding to my position if I've already owned the stock. And so I right here, right here, on March 27th, I bought 29 shares, and then actually I bought another 21 shares later on in the day because I was going back and forth deciding how big of a position I wanted to buy. And then on April 15th, I added another 24 shares. So this position is now up 10%. I feel really good about it. However, whenever you catch the bottom of a stock, at least in the near term bottom, you can kind of feel smarter than you really are, because you pretty much caught the exact bottom. However, I'm obviously happy with that result. However, I wanted to build this into a really big position, actually, because cybersecurity is probably the sector that I'm most bullish on overall. And Palo Alto is the biggest market cap of all the cyber stocks. And so I really was hoping that this dipped even more. The only reason I feel pretty okay is that I also own CrowdStrike. And so what I normally like to do is, within a certain sector, is go with the leader, with the biggest market cap, and then also buy like one of the smaller market caps of that particular sector. So I felt that CrowdStrike was really the up and comer in cybersecurity, and so I purchased 100 shares, I don't even know, a while ago, and currently sitting on 162% gain on that, or $20,000 gain. So now we're up 10% on Palo Alto, which is good. And I would be kind of sad that I didn't get to build it bigger, if it was not for the CrowdStrike position already being there. And so I'm feeling pretty satisfied overall with the combination of these two, because I feel like I have the slow and steady gainer with Palo Alto, and then I have the company with higher upside, I feel, with CrowdStrike. And if you add the two together, it's a 53,000, almost 54,000 combined, which would be pretty much right on par with the biggest position in my portfolio, which is Amazon. And so I don't feel the need to really chase Palo Alto anymore. It's only up 10%, so it could always come back. But if it decides not to come back, I'm okay with the position that I've built, due to having CrowdStrike already. So we can check back in again on this trade. Like I said, I won't be adding to it. If I do add to it, I won't add more than 26 shares, and just get to 100, and that way I can start selling some covered calls on it. I have some calls on CrowdStrike that are very deep in the money, unfortunately. I wasn't expecting it to run up as much as it has. I believe those are at $210 for January of 2025, I believe. So hopefully those shares don't get called away. I will be actively protecting that position if possible, to ensure the shares don't get called away. So I'll check back in. Right now I see Palo Alto as sort of a savings account for if any of my other stocks really go on sale, such as Tesla or any of the other more high growth names. If they decide to take a big dip, Palo Alto will probably be first on the chopping block for me to sell. So we will see. I'll keep you guys updated. Thanks.